about the second quarter. First quarter, not bad, but China stocks underperforming here. Though you did buy into China's property and banking stocks.
That is correct, yes. We think that the property sector and the banking sector have been depressed due to obviously some macro considerations. In the case of property, obviously because of the measures which were introduced to try to cool down the property market. In the case of the banking sector, well, the results which have come through over the last few days have been very strong. And we think that, in fact, loan growth in China will continue to be fine. And we thought that the banking sector has been depressed because of potential dilution, but then everyone is waiting for that. So we thought that instead of waiting for everyone to, to go into the banking sector when the rights issue takes place, we might as well just pick the time to go in first.
Right, you want to go ahead of the curve, right?
That is correct, yes.
Yeah, but people are, of course, trying to stay away from these two sectors because of tightening concerns.
Yes.
What about capital ratios? What about interest rates and a clampdown on property? So you're being brave here.
No, we've done some work on that. We've done, in fact, not some work, but we've done a lot of work on that. And in the field trips, we've found that, if anything, in China, there is a shortage of supply of property. Not an oversupply situation. Oversupply maybe in some luxury properties, somewhere in Shanghai or Beijing, but that is really in the minority. In fact, China still needs a lot of properties, and because the wealth is rising. So, in our field trips, we found that, in fact, the property price in China at the moment actually haven't fallen at all. And volumes start to pick up again. So that is very positive. And as far as the banking sector is concerned, as I mentioned, the results which came through are spectacular. So, some people might be cute and try to wait for the rights issue to take place and jump in. But then everyone will be jumping at the same time. Maybe it will be much stronger than you would expect.
So might as well get ahead of the curve.
That's right, exactly.
Okay, Khiem, let's talk about broadly then China's stocks. We look at Shanghai usually. We look at the Hang Seng with the 8 shares traded here in Hong Kong and also in Taiwan. Do you think we might see these benchmarks come back since we saw those losses in the first quarter, underperformers compared to the rest of the region?
Yes. I think that the headwinds you just talk about in terms of policy normalization by the PBOC and a few other things, that has hampered somewhat the progress of these markets. But we think that after the results have come through, and once investors are comfortable that, in fact, headline inflation in China is not going to go towards 7 to 8%, but if it peaks at about 3 to 4%, they will feel a lot more comfortable that the PBOC at some stage may say, okay, I've done enough in terms of policy normalization. And once that signal is sent to the market, we believe that the market will jump again.
Yeah.
Because China is not expensive on the P ratio. The H share is not expensive.
No, especially if you're looking at 13 times, maybe 12 times.
Exactly, yeah.
Not bad. Okay, what about RMB appreciation? Some are looking at that, obviously, considering we're hearing those really loud calls coming from the U.S.
Sure. We think it will happen, but the U.S. just have to lay off a little bit. I think that, China cannot be seen as acting under pressure from Mr. Obama. It wouldn't work because you're looking at 1.2 billion people, who are revering, the leadership. So the leadership can't really be obliged to follow the U.S. instructions. So I think the best thing is for both sides to be quiet and then China just do it, at their own time.
That seems to be the advice coming from a lot of fund managers across the Asia
Absolutely.
Yeah. So,
but that would be very bullish for the Chinese market.
Okay, well, let me just ask you this. You bought into Chinese banking shares, Chinese property shares. What else have you picked up recently?
In the region, we also have been looking at a number of technology stocks because technology sector is booming at the moment and will continue to be very strong over the next at least 6 to 12 months. And also, we also like consumer stocks, but consumer stocks have become quite expensive. So that's the problem. Industrials, there's some industrials which are still okay. So we've been adding on the industrial side as well. And I think that some of the resources stocks actually have come down a little bit because investors have taken profits on resources. But we think commodity, like the bid from Newcrest for Lee here today, that was a sensational bet. So the thing is, I think that people are still looking for those opportunities.
A sensational bid, but Lee here saying no thank you.
Exactly.
No